Hi, it's Jeffrey Cohen, July 15th. It's 8 a.m. New York time, 7 a.m. Chicago time, where we're at, and very happy to be speaking to you. So, who am I? I'm Jeffrey Cohen, Investment Advisor Representative for Chicago Quantum, also known as U.S. Advanced Computing Infrastructures Incorporated, which is an Illinois registered investment advisor. We are non discretionary. We don't take your money to invest. We provide services and quantitative analysis and fundamental research so that you make better investment decisions. So that's our business. And I want to thank you very much for tuning in. So where are we at in the market? So I found this anime and I thought it would be clever for you because all the news that we're hearing in the market, it makes you want to cry. And I have a couple examples I queued up, but it's just not a good story, right? And then we looked at what CNN said, and CNN Business says the fear and greed index, we are in extreme fear. So I don't really know what that means, but I do know that today is options expiration for a lot of individual stocks, and we are still long on some puts that expire today. And I believe that there's a lot of money that's been bet on the market going down right now, right? And so I believe that the market is going to want to try and prop up stocks that have a lot of options betting against them. If you're a market maker, it's the quickest way not to lose money. Let's say you have options on 1 million shares of a stock. Just make sure it doesn't fall. You have to 4 p.m. today, Eastern. And it's going to be a battle royale, I think, on certain stocks. So that's interesting. So what do we know? Well, one of the things that we know is that there's a lot of talk in the fixed income market, right? Fixed income is bonds. It's people that borrow money and have to pay it back, and so there's this piece of paper that has value, right? And so mortgage-backed securities are down this morning, and you can see they're trading below par. So 4.5% interest rate mortgages, when the 30-year fixed rate for new mortgages is now 5.77. I don't know that people want them, right? And so they're not even willing to pay 100 cents on the dollar. They're down 6 ticks or 6 30-seconds. And so mortgage-backed securities are down. If we look at overall interest rates, the 30-year bond at 3.09, right? It's look back over a month. I'm still surprised how low it is, right? And so low treasury bond yields turn into high treasury bond prices. Thank you, FinViz, for this beautiful visualization. This is the futures. And by the way, I have the spider up here at 378.65. We'll keep an eye on that for you just to see if anything changes. Come on now. I just need the bottom where I can scroll over. There we go. So the 30-year bond is doing great. It's coming back up, right? People that invest in fixed income, I'm sure that, like me, you probably got your 401k statement for June 30. And I did, and I lost some money. I didn't lose a ton, but I lost some, and I lost some because of this. I lost some because I have enough money in fixed income that I have a little taste of the 30-year bond and probably a little taste of the 10-year bond. And so come the end of June, I wasn't doing that great. And so it's just your bond funds are probably down a bit. But this means they're recovering and they're kind of solid, right? But we saw some other stuff in the market this morning, and I have a hypothesis on what it is. I can explain the whole thing in like 10 seconds. So let's try. Ready? Wait, not ready. I'm going to give you the whole market in 10 seconds. All right, now I'm ready. So you can see the S&P, the NASDAQ, and the Russell are up this morning. The Nikkei is doing fine. That's Japan. Europe looks strong. The VIX is down. Bonds are solid, right? Yields are lower. Why is that, Jeffrey? Why is Copper down to 317, but yet silver looking pretty strong. And the gold doesn't work for me, 1703, but it's okay. The real answer to the story is that the US dollar weakened yesterday and overnight. The US dollar weakened. So the euro is back over a dollar. It's 101.03. The euro dollar is 101.03. Right? I was just waiting for it to say 0.99, right? Japanese yen still looks solid, right? Canadian dollar still looks solid, but the US dollar fell. Now it's still trading about where it was for Great British Pound. It's really a euro thing. My guess is there's a few other currencies. But for right now, dollar weakening means it's good for stocks, good for equities. It's also, dollar weakening is good for the nominal price of crude oil and to some extent gasoline, right? So crude oil is a global commodity. Any of these global commodities, copper, silver, gold, platinum, right? Metals are easy because they're so fungible, right? And meaning they can be traded anywhere. The value of an ounce of gold is the same thing anywhere, right? And so you can trade an ounce of gold anywhere. You can even put it in the mail if you wanted to. So equities are up. In general, global commodities are up in dollars, except for gold. I think gold's got a problem. Gold's going below 1,700. The dollar has slightly weakened. So watch the dollar today. I think that's the story of today. It's the dollar. So where are we at with some of the other data points? So pre-market, we are up big time. S&P 500 is implied fair value is going to be up 10 points. And so we're watching it this morning to see. This is the spider. So this is an ETF that tracks it. So it's not the S&P 500, it's an ETF. That means it's an exchange traded fund or like a stock, right? And then you got the QQQ. We like to track that too in the morning. That's your NASDAQ composite. And while we're at it, let's do the hat trick. By the way, I hope you like this hat trick. It's red because we're in a bear market, but it glows. I just thought you might like that this morning, right? Because sometimes the market can be a little scary, but this way you got a fun hat to look at. So stocks are up. Stocks are up. Up. By the way, look what's up. Energy's up. Energy's up. Energy's up because oil's up. Gas is down, oil's up, right? Oil's up because the dollar's weaker. I don't think the recession's over. I think that's silly talk, right? So what happened yesterday in the market? This is a bubble chart. I like a FinViz bubble chart. I think it's one of the best visualizations on the entire internet. And this shows by industry what's been down and what's been up. So what's up is Costco and Qualcomm. We love Qualcomm, by the way. We don't own it, but we love it, right? It's for my investment trust, right? Just call me Jim Cramer-ski, right? But no, I like Qualcomm. I've been following Qualcomm for a long time. The fact that it's up over 138 means it's a pretty strong read on Qualcomm. Costco looking pretty good. Las Vegas Sands looking pretty good. What's down? Caesars. So there must be a specific. And ConAgra brands. CAG. So ConAgra brands will always have an issue with inflation and the US dollar because they trade commodities. They move enormous amounts of food around the world. Moderna, that's just been falling like crazy. Settle down there, gentlemen. Settle down. Yeah, we got chaos in the house this morning, it sounds like. And you got some other little like Newmont Mining, Freeport-McMoRan. So we're going to talk a little bit about Freeport-McMoRan because this is the kind of stock that you should be and I should be making the plan on how to buy it, when to buy it. Freeport-McMoRan, Cleveland Cliffs, Newport Mining, and there's many others, Avale. Each one of these has hair on it. Rio Tinto. There's a bunch of others, but they've all got hair, right? Market looks good, but those stocks have hair, and we're going to talk about it. So one of the things I like to do is I like to look at the new highs versus new lows. So if we look at corporate bonds, that means companies, right? And we look at investment grade, high yield, and convertible. Convertible means it's when they have the bond, but it can be converted. Oh, thank you. I have a question from MJ. Hello there. Thanks for joining. Appreciate that. I think the spider will be strong today. Would not count on a down day. But signs are weaker for the next 6 weeks. And expect spider to fall to 3,700 to 3,200 range. I'd say by September 1st. So, but for today, you could probably make some money on some long plays. So if you take a look at the corporates, you can see that 785 new lows. So these are bonds that are trading lower. So what happens is you can look at bonds, and they trade all the time. SMLP is one of my favorite companies. So we're going to take a look at a bond. I just want to explain how it works. SMLP. So I know this company, right? And this company has 2025 debt. It's about 200 million left, 250 million left. And 2026, that's like 800 million. So we'll look at the 2025s. And if we scroll over, it's yielding 15%. It trades at 79.78. So think of this as par would be $100. It's trading at like $80, so it's down 20%. So if that were to drop another, let's say $1, it's probably at its 52-week low, and it keeps dropping, right? And so if you buy this bond and they pay off, you're going to earn 15% interest. That's crazy, right? Now, if we take a look at that bond, I clicked on it. By the way, this is FINRA Morningstar. You learn more about it, and you can see the pattern, right? So over the past 5 years, that's crazy. Let's look at over the past 1 month. And you can see this bond is trading like a stock. 259 million remaining. It's senior secured debt. But it's unsecured. It's senior, so it's senior, but it's an unsecured note. So in theory, if they don't pay it, you're shit out of luck. And so if you look at how it trades, so on the 14th, yesterday, it traded, in general, they're grouped. Because what happens is somebody buys it from someone who buys it from someone else. And so ultimately, right, somebody bought $92,000 worth of the bond at $79,781. In order to fill that trade, they bought $72,000 and they bought $20,000. That's what it looks like to me. And so it's just interesting, right? So you've got a bond that actually, in order to get the supply, it drove the price up $2. Fairly illiquid markets. You could see $5,000 trades, $3,000, $2,000, $10,000 trades. That is not normal. When we started looking at this bond, it was trading in the millions. Very few people would trade it, and it would trade in the millions. And so here's a bond trading like a stock. And so when I show you that you've got, where did I write it down? I didn't write it down. Come on now. Here it is. So when I show you, you have 34 new lows, new highs, and 783, 85 new highs, new lows. I'm sorry, new lows. Drink some coffee, man. That's about a 20-to-1 ratio. So that's 20 new lows for every one new high. That's terrible market breadth. Now let's take a look at FinViz, the main page, because they thankfully give this data to us every day. $26 new highs, 1,114 new lows. So that should give you like heart palpitations. If you're a long investor, if you just like to buy stocks and make money, then you are crying, because the advancers decliners was like 2 to 6 or 1 to 3. So for every one advancer, you had 3 decliners. So in theory, for every one new high, you had 3 new lows. But in fact, it looks like it's about 44 to 1. 44 new lows for every one new high. So if you have a stock that you like and the price is down, don't buy it. Because if the price is down on a day when the S&P 500 was only down 0.3%, when the NASDAQ actually went higher, why are your stocks, why is it 44 to 1? The stocks are reaching new lows, and 20 to 1 on fixed income, or their bonds, their debt. Not every company has debt that trades, but those that do aren't doing very well. This is a terribly bearish trend. And so the question about the S&P, and I could talk a little more about it. So the first thing to look at is good news at the dollar, and actually good news that the 30-year bond yields are down. That's actually really good for stocks in the short term. If you believe that the 30-year bonds and the 10-year bonds can stay, at or below 3%, that's very good for stocks. You might make a few bucks, right? What troubles me, though, is that the 1-year treasury is above 3%. So if you want to give your money away for 30 years or 10 years, it's like under 3 or close to 3. If you want to give the government your money for 1 year, it's over 3. What if I want to give the money to the government for a month? You're almost earning 2%. Now, why is this like a terribly horrible thing for stocks? It's because it's a safe haven for money. So the reason I remember, I used to work for Bridgewater Associates, which is it's a hedge fund, right? Great, by the way, great firm, great company, smartest people in the world, right? And so I've heard said that, when there's high inflation, where are you going to put your money? You have to invest it. You're not going to lose 9.1% just sitting doing nothing. But the fact that 1-month treasuries are starting to yield 2%, there's going to be people that like the safety of that. They have more than $250,000. They're not going to spread their money out into FDIC insured accounts. They want to park it because they think something really bad's going to happen and they want access to their money in a month. And the fact is, that's a pretty good rate. And so people are going to start wanting to do that. You all know how inflation came, and this is important. So the CPIU is the urban CPI. Non-seasonally adjusted, it was up 1.4% in June from May. Seasonally adjusted, because, watermelon costs more or less or whatever, because it's the summertime, 1.3%, which is basically the same reading, and 9.1% up year on year. In the cities, without food and energy, it's up 6%. They call this the core. Medical care, up 4.5%. That's great. Means at least if you get sick, you're not going to die poor on the street. CPIW, I don't remember what that was. I'm so sorry. But that's up 9.8%. That's a different reading. So, yeah, inflation went up a lot. And so these rates don't make any sense. So a 3% 30-year bond, a 3% 1-year bond, when inflation is 9%, means if you give your money to the government for a month, you're losing 7 to 7.5% of your spending power on an annual basis. So why would you do that? So we'll take a look at the COVID numbers. We keep doing this because COVID's going up. Hospital admissions is no, that doesn't look right. It's almost 6,000 per day, new hospital admissions. And the number of cases is creeping up. We were watching it down here at 105. It's now 125, 124. So COVID's not over. And by the way, China is having an amazing resurgence in COVID. This is US COVID, right? So we're not done. Zero Hedge, this is one of the news sites we watch. By the way, they have some of the most ridiculous articles. But in general, all of it's bad news today. And I'm not sure why. It's recession. It's Texas is out of power. Deutsche Bank is saying that people are going to start chopping wood in Germany to keep warm for the winter. Now that is so stupid because I've worked in Germany and people live in apartment buildings and houses and they don't have extra trees in the woods. There aren't that many woods. Now, if you're down in Munich and you're in Bavaria, you could probably go in a car, but you can't cut down someone else's wood. So this is the most ridiculous thing I've ever seen, that wood will be used for heating purposes. Right? Next thing you know, they're going to be burning books and furniture. It just means poverty. You guys are so stupid, right? We do sanctions against Russia. They cut off the energy supply, and now we drive Europe into a state of poverty. By the way, that's why when we look at the currencies, Forex, foreign exchange, you see the euro dollar is at 168. That number was different when we looked at it not that long ago. I don't know. So 168, no, maybe it was the futures that was different. Why is that number different? 168. The point is, Europe is gonna be brave, right? With our President Biden, NATO is being brave and taking on Russia, and as a result, NATO is gonna pay through the nose. Yeah, the future's trading at 101.07. That other number is not right. Look at another source. So I don't like this story. The other, so that was one. Europe is turning poor. Well, European stocks are up. So, hey, who knows? Maybe they don't know something. China, yesterday, China stocks were down significantly. 1.5%, 1.6%. Shenzhen and SSE. And we looked at the Hang Seng, right, which is Hong Kong, was down 2.2%. That is really bad. China's down 2%. That's really bad. Jakarta's down 0.5 point. And I love the Jakarta market. I love Indonesia, by the way. I've been there. It's great people. Truly kind. And their market doesn't trade that much, but they're down. I don't like to see that. I love those people. Even Russia's down. Everyone's down. Here's the funny part. And I'm going to have to show you something. So do you guys know what the VIX is? Do you guys have a sense of the VIX? The VIX is a volatility measure. So we'll look at it over a year. We'll go full screen. I'm going to share with you something from our model run. And by the way, I promised my wife I would tell you I had a wonderful apple strudel this morning. Homemade. Just bursting with flavor. I don't know why that matters, but she wanted me to tell you. So, if you look at the VIX is at 26. So you divide that by 19.2, I think. Because it's supposed to trade continuously. So 26 divided by 19.2 is roughly 1. Maybe 1 1/3. So what that says effectively is the standard deviation of the market is 1.3%. So on a day-to-day basis, you would expect the S&P 500 not to move more than 1.3%. If it does, this VIX, or this pricing of options, right, was too cheap. If it's greater than 1.3, if it's less than 1.3, you're fine. So, and I was tracking this, and I was running like a little chart, and volatility went through the roof. But we're going to take a look at our model output. This is from last night, down and up. I know you guys like when I do that because I'm sharing inside baseball here. And I want to share a spreadsheet with every stock that was in like the up run. So that's always interesting. So the market's looking good today. I think you got a solid S&P today. I think you're going to make money today if you're long. So first thing I want to show you, so these are stocks that make a profit. We took out the market cap limit. It didn't even change the answer, which is funny. It saved us like 2 or 3 minutes in the run. We're going to be speeding up that run so we can maybe even do it during the day. That would be really fun. I want you to take a look at the stocks that are showing up at the top of the list, and then we're going to talk about it. Well-Built is the only stock with a negative CQNS score. That means, oh, you're welcome. You're welcome. Any stocks in mind? It's good stuff. So, Well-Built's got a negative CQNS score, and the reason is it's got a tiny expected return because it has a tiny risk profile. The stock's actually up 1.3% over the average of last year, and the variance is teeny tiny low. So if you want a safe stock, that's Well-Built. And then you look at some others, right? Like P&M Resources, Crestwood Equity, Sanderson Farms, very, very safe bets. Johnson & Johnson. Algonquin Power. If you want to hide out, that's where you hide out. And what's interesting is the top of our model has a bunch of stocks that haven't lost any money. Greater than 1.0, whereas 1.00 is the average price of last year, average closing price of last year. And you can see a lot of the stocks that our model likes haven't fallen. So they don't really have price volatility. They're not up and down. They're just solid, right? And then you see others like Berkshire Hathaway, McDonald's, Marsh & McLennan, Pepsi, Coke, Coca-Cola, ADP, the NASDAQ Stock Exchange, Illinois Toolworks, Apple, Gallagher, Arthur J. Gallagher. So these are insurance brokerages. This is like dusty businesses. So the model has gone dusty. So we ran the heck out of our servers last night in order to give you some good insight. The first thing is that the variance of the S&P 500 is flat. So flat variance. It is not more variable. That is so interesting right now. Oh, look. While I'm watching, here's Corbis. You know, we own a little bit of... Excuse me. Excuse me. You know, we own a little bit of Corbis. So we're always watching it. And Corbis, I believe, has a high potential for being acquired by a company like Pfizer because of the similarity in the research profile on cancer tumor reducing drugs. Cancer tumor reducing drugs. And so I can see if you wanted to buy any this morning, Corbis, it's $3. It's about what we think it's worth. Unfortunately, right, the people who want to buy it only want to pay 26 cents. So that is the story of my life when it comes to Corbis, which is, God, what a terrible stock. Terrible investment. It's a great company. It's worth $3, but it's a terrible stock. So let's go in. I keep seeing these new companies pop up. Farm Me Inc. out of China. Metin Holding Group, METX, out of China. And METX shows up as a real crap show on our model. So what's up with these Chinese companies that just don't trade right? I know what's up. Take a look at RGC one day. There's a Chinese company that does not trade right. Not at all. Not at all. Wouldn't touch it with your gloves. All right. We have 2002 validated tickers in our up run. The variance of our up run is 1.87 times 10 to the negative 4, 1.9. So the variance has flatlined. It's gone solid, right? That's interesting. You can see Wellbuilt is a top stock picked by our model just because it's safe. And then you've got companies like MetX out of China. That's the third worst stock in our up run. And then you got the Real Brokerage. You got Shitco Royalties Corporation, SITIO, STR, Upstart Holdings. We actually liked Upstart, but it just trades terrible. The way it gets to the best of the worst of the best in our model is that it has too much variance in the day trade. A day trade just moves, but the stock isn't going anywhere. God, I remember seeing Brooklyn Immunotherapeutics as a meme stock. Do you know that thing is down 88.4% this year? Oh. BTX is down 88.4% this year versus the average of last year's price. We're not talking about from the peak. We're talking about from the average. Farm Me is down 81.6% from the average of last year. MetX, another Chinese one. We just talked about these. And I didn't make this up, by the way. I didn't prep this. METX out of China is down 86.3%. So the problem with buying these Chinese listed stocks is there's nothing behind them and we don't trust the reporting. So MetX is down 83%. Farm Me is down 89%, 81%, 80.6%. And so these showed up because we took out the market cap limit in our model. But God, these are terrible. God help you if you actually bought the stock thinking they had a good business plan. Now, Loan Depot. So any company that's in the business of making mortgages is obviously in trouble. And so LDI is in trouble. Now, we're seeing it because we're looking at the worst performing stocks of the entire stock market of companies that made a profit. Worst performers. Coinbase, Grow Generation, Liberty TripAdvisor Holdings. These are names you know if you're in the market. QRTEA, Newegg. Worst performing stocks. Lending Tree. Of course, the mortgage brokers are all going to be down. Mesa Air Group, a small airline that does feeder. Tupperware brands, you saw that. Roku is down. Netflix is a worst performing stock, down 61% from the average last year. Yeah, with the spider, I agree. Going to recover eventually. We like the TNA as a plan of recovery. What say you? TNA, and I'm going to pop it up. We got to pop it up. Look at that. Showing some strength with the futures. I like it. So TNA has a very, very solid risk return. So when I say that, I'm not saying that it's going to go up. But when it moves with purpose. It's an efficient ETF. Now, of course, the spider's been down. And so what I would say for most people is, right, don't do this at home. Don't trade the S&P 500 unless you know what you're doing. Look at that trend line from the tops. I'm afraid to draw it from the bottoms because you have 1, 2, 3, 4, 5 lows. And they're starting to converge. So, I don't know. The problem is this thing could drop to $20 before it makes its ultimate recovery. But when it does, you're going to be filthy rich because this thing is going to fly the other direction. So, yeah, I like the S&P 500. I love the S&P 500. And I do think you're right. It is eventually going to break out of this. But it is in a committed, confirmed bear market. And my advice is just to wait. Wait it out. Hold your capital. Yep. That's what I'm thinking. And I want the market to go up. I do. So the other thing I think is interesting for y'all is we tried some different things. We run a genetic algorithm, which is by far the most successful way we're going to pick our stocks. There was a bunch of stuff in here that was interesting. But I guess the thing you guys want to see is what's our top... You stop it. What's our top pick? Jeff, you run the model. You get us on the video. What do you think is good? These are the stocks I like. These are the stocks picked by the model. You should hold them as a whole portfolio. Buy and hold. For like a day, a week. We say 20 trading days. Here's the problem, though. This edge, this number in the front of it. First off, it's negative, which is good. Because the S&P 500 equals 0. Lower is better. And it took us 3 hours and 22 minutes to find this portfolio. And I got to tell you, it is not that much of an edge. And so, yeah, the S&P 500 are effectively all stocks held, which is 2,000 profit-making stocks, yields a value of -8 times 10 to the -9th. So it's effectively 0, right? So this is not a very good score, right? It takes a lot of work. Now, you do find a lot of crap out there. Like, this is interesting, right? Shenandoah Telecom paid off a bunch out in dividends, right? You've got stocks that have fallen dramatically. ATA, Bolt, Chesapeake, Farm Me, Metin, they've fallen dramatically on a factor of like 1/E, which is 2.71. So a 37% fall in one day. So this thing's probably fallen. Upstart fell 30% in a day. Metin fell 30% in a day. FAMI fell 25% in a day. This is awful. It's awful, right? Because you're holding these stocks. You think you're going to be safe, and you're not safe at all. Huge beta stocks, right? So if you want to bet on the S&P 500, You could just buy SI, Upstart, Coin, SI Time. There's a few others that usually go together. Melly, Lending Club, TTD. Grow Generation is awful. I've lost so much money in that stock. AOSL, NVIDIA. What else do I normally see? Max Linear, ACLS, LSCC. Those are AMD. So if you want to bet on the S&P 500, the other thing you can think about is you could just take a portfolio of high beta stocks. The problem is that if the S&P falls, so in essence, you need to hedge. So that's another option for you, right? If you want to bet the S&P. Yeah. Cool. So what else? What else? I'm going to go through the rest of the research that I do because I think it's important. So we talked about the VIX. The VIX should be higher because the volatility's been rising. So interesting. The market opens in 45 minutes. Where are we at? Right? I mean, market's been down over the past 5 days, but yesterday it recovered to not lose, right? So yesterday it did okay. OPEX, so operations expiration, you've got significantly negative breadth in the market. You got the dollar weaker. You got China down. Yeah, look at that. We're talking about it and the volatility went up. It's interesting. The futures are up. I think the futures are up just because there's a lot of money in the options, right? And they gotta settle out. TNA is something to watch if you want to be real long in the S&P 500. I really struggle with that right now as a trade. 379, 287, 170. The Russell's really suffered. It's down almost 30% this year. It's not looking that safe. Look at that. This is over 1 day. This is the Russell over 5 days. This is a NASDAQ over 1 day. It's a NASDAQ over 5 days. NASDAQ showed a lot of strength yesterday. I was proud of it. It's like my daughter's learning how to ride a bike. I was so proud of her. She rode for 5 miles yesterday with a teacher. So we take her out, and then we have a teacher take her out to practice things. And so proud. Such strength. And, fell a couple times. It was really hard, but did okay. And that's like the NASDAQ for me. The NASDAQ is like my daughter riding a bike. Yesterday was the best day. Today, we're taking her out to hilly territory, which is fun because we're going to start right down at the lake. There's a park by the lake, and we're going to go up this long, winding hill that goes up a lot. Climbs a ravine, but it does it gently, and we'll practice some of the hill work. That's what the teacher said. S&P 500, interesting, right? It's the safe bet, but you don't see a lot of money flowing into it. You don't see a lot of strength there. So, talked about the euro. Let's take a quick look at the futures again. It's interesting. The NASDAQ is starting to lose its edge, and the Russell as well. I mean, it's nice when the S&P is up, 0.26, but that's not a lot. Yeah, let's talk about this. There's a couple of stocks that we like, and there's a couple of people that we follow on Twitter, follow us on Twitter. So let's look at Freeport McMoran. So copper. Copper was doing great, and now copper's not so great. And so when you look at the model, no, I can't do it. Darn it. Fine. When you look at the model, right, it's gone up. So Freeport McMoran has risen with the price of copper because they're the world's largest copper producer. They're very good at it. They're very efficient, low cost, lots of mines. They've spread their geopolitical risk. And then you look and you see when copper started to fall, right, they really pounded the stock down to like 35. Recovered 44, but truthfully, why would Freeport McMoran recover if the price of copper's down? So now you're at $25 a share. I don't know whether Freeport McMoran is a good buy at $25 a share when the book value is $10 a share. You're still paying 2.5 times book. And if the price of copper goes down, don't count on that dividend because the dividend will be gone, right? All you can count on is that when the price of copper goes up again, maybe the next time there's an economic recovery, it'll do great. It's positioned. Cleveland Cliffs rose from $16 to 32 to 16. And yesterday fell below 15. I want to cry every time I look at Cleveland Cliffs because there's a lot of steelworkers. There's 12,000 steelworkers that are renegotiating their labor agreement. And they were expecting some wage increases. You know they were. You know they're expecting 9.1%, backdated for a year. And moving forward, they probably want a 9% raise every year for the next 100 years. I would if I was a steel worker. It's a dangerous job. I've worked in a steel mill, by the way. It's, or in a steel company. It's, I loved it. I loved every day. I loved every day when I went to work there. I just got to tell you. I loved every day. I'm totally like a steelworker guy. Now I'm a little bit older, but yeah. I could swear like a sailor. I love it there. But I never did. I'm a good guy, right? I was the suit that would walk around. And so, point is, Cleveland Cliffs is dying. See that right there? That's called a bear flag. I finally see one, right? So Cleveland Cliffs dropping. And the reason it dropped is because the price of their product dropped. And it didn't drop because anything bad happened. It dropped because the economy's softening. And there's a nice bear flag where people fought. They couldn't believe that Cleveland Cliffs would drop to $20. So they bid it up to 24 and then bam. If anything, this is a head and shoulders. Shoulder, shoulder, head, shoulder. Death. And now it's just in free fall, right? They're probably wondering whether they can pay their debt. Now they got to do wage increases. This company may turn into a money-losing sinkhole of disaster. But 6 months ago, this thing was beautiful because the price of steel was up. They have no control over the price of steel. Vale, they mine a lot of things, and they're a Brazilian company, so they're affected by the reais, the RA, the reais, the reais, the currency. It's at like 5.5 to 1. When I did business in Brazil, it was 4 to 1. It wasn't that long ago. I'm not that old. So look at this. It's just it's in a big decline. It's awful. It's awful. It's a 12.5. Not to say it can't fall to 10. Not to say it can't fall to $1.50. But Vale is in trouble, right? And again, it's the price of what they sell. Newmont Mining. Newmont Mining is the top gold mining stock in the world. Diverse, low cost, well run. Gold stock. Gold is down from 2,000 3 months ago to 1,700. It's down 15%. So of course, everything Newmont makes and sells is worth 15% less. If they had a 15% profit margin, they now break even. So they're going to shut gold mines. It's a negative spiral, right? So it's a good stock. It was a $55 stock for a whole year, and then it popped up because people were worried about gold going up, and then gold comes down. I'm not saying any of these stocks are a good buy. What I'm saying is that there's a trend, a destructive trend on basic materials and commodity stocks. And you can actually see that here. Basic materials, chemicals. I don't follow the chemicals, but my guess is the same thing. I'm more a minerals guy. But look at Nucor's down, building materials, copper, chemicals. Let's take a look at chemicals. So I used to do work for Dow Chemical, but I'm no expert on chemicals. It's the same chart. It's the same chart as a whole bunch of these charts, right? Cleveland Cliffs. My guess is that ethylene and some of the things that they sell, the chemicals that they sell, the prices have dropped. I don't know. We'd have to look at the CME, see if there's a future, some kind of commodity future on it. But just in general, my guess is it's down, right? And so as we go, if we go into a recession, because we're not there yet, but if we go into a recession and if we destroy our factories and our jobs, and if Europe doesn't make peace with Russia and Russia cuts off the energy and they have to shut all the factories down, these chemicals are going to sit on the loading dock. And eventually Dow and DuPont and all these other companies are just going to have to stop making the chemicals. Because the price is going to drop to effectively less than it costs to make it and store it. And you can only make so much inventory, right? This stuff doesn't... Where are you gonna hold it? In 55-gallon drums? To the moon? I mean, you just got to shut down. And then you're still paying your wages, you still have your pension costs, you still have your general administrative costs, your sales costs, your factory labor workers who you're not going to fire because you'll never find them again, right? You're going to furlough, you're going to pay them. And so you're going to lose money. And so DD, Dow, same thing. Same story as Freeport-McMoRan and Cleveland Cliffs. Vale has a currency issue, so it's a little different. Newmont Mining, yeah. So I wouldn't touch these stocks with a stick until we find out whether there's a recession or not. Till we find out what the Fed's going to do and if they're going to destroy demand or they're going to drive something else. So, banks. We came out very negative against the banks about 6-8 weeks ago. We have since unwound most of our positions for a small profit. Thank you. I don't have to eat lentils, right? I can eat steak. We made a little bit of money. Now we're short something else, by the way. Pretty exciting. I'm hoping that we do well. I'm not going to pump it because I went short last night and the night before, and I don't want to affect the stock. So I'm not going to tell you what we're short. If you really want to know, DM me or call me. You go to the website, chicagoquantum.com, give me a call. You can shoot me a message on Twitter, DM it. I'm Chicago_quantum. I'll let you know, but not pumping. Yeah, so for the day, this is what's going on. But for the month, so interesting. For the month, you've been optimistic on QQQ. Look at that. It's beautiful. For 6 months, red. Okay. For 1 month, green. And yesterday, market really struggled to recover, but it was Apple. By the way, Apple was one of the top 4 stocks picked by our model earlier this week. And so it doesn't surprise me that Apple is up because the model loves Apple. The model loved Microsoft earlier this week. Truly, these are the 2 stocks. So what this means for you, so you wouldn't know, right? You just see the stock went up and you think, oh, the model is some magical formula. It's not. It's not. It's just math. Oh my God, it's just math. And we're going to tinker. We're going to tinker with the model. So what the model does is when the market's going up, it looks for high beta Low risk. High beta, low risk. Make money, don't lose money. Make money, don't lose money. Sounds great. S&P 500 goes up, you make a ton of money on your beta. You don't lose when the market hiccups because that's a low variance, high beta. So interesting. How the hell does that work, right? So then you look at stocks like Apple, Microsoft, and earlier this week, they were like loading. They were loading. They were like coiling a spring. And the model could see it because it could see that the amount of risk in that stock was dropping. It was loading. They were loading that stock. It was like compressing, consolidating, not moving. Still had a good solid beta, but not moving. And then pow, up 2 points in a day. Up a half a point in a day. And that's what happens. The model looks at that. And to be honest, most of your trading desks will look at that. Whoa, what stock hasn't been moving? What stock looks like it's strong? What's a safe bet for a couple of point pop? You earn 2% in $1 billion bet, you're doing really well. And Apple is so liquid, you could actually get in and out of it. The stocks we trade are not liquid at all. So you really can't get in and out. So we're going to wrap up. It's almost 8 o'clock. I want to just quickly walk through some of the key metrics that we talked about. The first is that new lows greatly outweighing new highs. Inflation's still there. Your 1 month treasury at 1.87 is scarily high and probably going higher. The 1 year treasury at 3.16, it's up 3.16. So 1 year at 3.16, 10 year is under 3%. So what the hell's going on with that? Why do you get less interest for 10-year money than you do for 1 year money? I think they call that an inversion of the yield curve. And then 3.07 on the 30-year bond. So your long bonds are being bought up. Bid up, bought up. It could be that the number of those bonds is decreasing. So one reason for the interest rate to go down and the price of the bond to go up. And let's see, what are we talking about? Price of the bond going up. 30-year bond trades at exactly 140. So par is 100. So it's 40% over par. 10 years at 118.80 or 18.80 over par. 5 years at 112. 2 years at 104.77. So why is a 30-year at 140? It's possible that the Federal Reserve Bank is starting to taper and is starting to let those mature or just basically buy them back. Bid for them and buy them back. Bid for 10 years and buy them back. It's possible that other human beings are bidding for them and buying them in the market. That people just want it. They want it. They're not afraid of interest rates. They would rather hold their money for 30 years safe and earn 3.07% for 30 years and take a risk in the market. Now, it could be they're doing guaranteed income contracts. I mean, 3% isn't bad. The problem is, you know it, is that you're losing 9% in purchasing power in the United States to earn 3% for 30 years. But my guess is that's what's happening, right? It's a flight to safety. COVID's up. We talked about that. Look at that, the spider at 381. That's good. You got some strength today in the market. By the way, the Russell, not so good. The Russell looks like crap today. Small caps are down, large caps are up. That's what this model says. Bitcoin, 21,000. It's right there at support levels. We've talked about it. It's maintaining support now for about a month. It's a coiling and consolidating spring. That's great. Euro dollar is still right around $1. Newmont Mining still looks like crap. Vale, Cleveland Cliffs. Freeport McMoran, Dow. God. We might have to start buying some of these stocks just for emotional safety blanket, right? I love the manufacturers of commodities and chemicals, base chemicals, right? Good stuff. But I don't think that they're a good place to put your money right now. So S&P 500 popping. Look at that. 38.31. That's crazy talk. Wait a minute. No, it can't be. Yeah, it is. 38.32. Look at that. And a fat lady over to the right there. Wearing Depends. That's kind of odd and disgusting and normal at the same time. I have old parents. I get it. Look at the NASDAQ. Look at the Russell. All right. So here's the deal. Market's popping this morning. It looks like it's going to open higher. It's going to open higher. Where's my green hat? Have a green hat? Something green? Wave a green flag? Something. Here, I got a green book. We wave something green. Hat comes off. Green. Quantum computing for beginners. Green. Market's green today. Oh, yeah. Got a green start. Green. Green machine. Up 1%. That's a very fast whipsaw. The VIX. Down, down, down. No fear. No fear today. Even though you have 20 to 1 and 40 to 1 negative market breadth, the indices are being bid higher. So my guess is that there's some trading desk out there that hit the big fat button. They hit the easy button. Buy, buy, buy. Buy, buy, buy. Where's Jim Cramer? Buy, buy, buy. There he is. That's what we're seeing. It's crazy. Buy, buy, buy. Isn't that unbelievable? And that all happened while we were talking. Look at those futures. Look at the big bet. Look at the volume. I don't know if you can see it. So I'm going to zoom in like a crazy man here for you. I don't even want to talk about it. Just look at it. Look at the volume. Look at the number of contracts. People are making some enormous bets that the market goes up today. And in fact, by making those bets is driving the market higher. So on that note, good luck today. Make money. You know, we talked about TNA as a potential way to bet on a market rise. And you see 33.51. It's up almost a point. Again, just remember, just because I'm not a pumper, the S&P 500 is in a committed downturn. This is not a safe bet by any means. And so, just be careful out there. Just be careful out there. Don't go crazy. The stocks we have investments on, what's going on? American Shared Hospital Services down. That sucks. Hallador Energy's down. That sucks. Corbis is up a little, but what else is new? I feel like I get teased every day with Corbis. And so, we're doing okay. We're up a couple bucks yesterday. Not much. It's a small portfolio. So, again, thank you very much for watching. You take care now. Oh, if you like the video, hit the subscribe button. It really helps us. It helps YouTube to spread the message. And drop a comment. We do like that. If you really like the video, drop a message on your social media feed and just say, hey, you know, we watched this in the morning. We really like it. And here's the channel, Chicago Quantum or long string of letters and numbers, I think, that YouTube gives us for our channel name. And really appreciate that. That would really help us. And we're going on vacation for a week, so we will not be streaming next week. So we'll be back in 2 weeks. You take care now. Bye-bye.